Hey everybody, welcome back to the channel. The dollar is falling. Gold and silver looks like it's about to pop. I've got simple charts, simplistic charts Joe, or crypto charts Joe, either one. He's on with me today and he's going to explain what's going on and why this could be very bullish for gold and silver. All right, Joe.
Okay. Yeah, good to see you. Let's go ahead and get going. I know people want to see it. And can you see the chart now?
Yep.
Is it popped up? Okay, this is the daily chart of the dollar, basically the U.S. dollar currency index, the Dixie. And as you can see, and this is overnight trading, going into tomorrow, the futures contract. So we're actually looking at it live, okay? And as you see, it had a little double top up here, rolled over. And unless the Fed or the powers that be come in and save the dollar, we could see continue, fall to the downside near term. Now, this green dash line here is very important, okay? That's our, matter of fact, and including this white trend line that goes back to 2016, okay? We've hit it here a couple of times and bounced off. Right now, we're at honestly a very critical level with the Dixie, with the U.S. dollar currency index. And this is the weekly chart. In other words, every candle is 1 week of price action. And if we close under that green dash line there at basically 101.37, let's call it, we'll definitely come back down and retest these support levels from 2020, okay? And I believe the near future, probably could be this year, we could come down and test this 200 simple week moving average, and that takes the dollar under 100. That puts us, about $98 or so, and that would really skyrocket gold and silver. And if it's okay, let me jump over to the gold chart. That's probably what people are more interested in.
Well, it all has to do with the dollar. It could be that dollars are running to gold and other things.
Exactly. Yeah, it seems, a little bit more risk on and with the dollar pulling back like this. Now, we are technically, and not to get real deep in the woods, we are on a pretty good time count with the number of red candles. So we could see what they call an opposite color candle, like a green candle come in, pause candle, maybe a little push to the upside, over the next few days, and then, rotation down, back to the downside like that. Okay. Well, let's pop over on gold real quick. That's what, everybody wants to see.
Yeah, gold
and kind of go back and, yeah, go ahead.
Yeah, go ahead. I don't mind.
Okay. And kind of go back in history, had a little double top up here, then a head fake. In other words, they ran it up and a lot of people jumped in and boom, the next day they slammed it down. And then the rest is history, which brings us to where we are now. And what's very important about this chart is that potentially we could close, and this is, again, overnight trading, extended hours trading, on the futures. And we could get a close. Nothing counts until time's up and we close that candle. Okay, but bottom line is looking good right now because of the weak dollar. But as you can see, we're now trading up and over that 20, that blue line there, which is actually very bullish. We haven't closed over that 20 since back here in the middle of May. Okay, we've been under it. We kind of formed a little consolidation right in here, as you can see, a couple of hit here, bounced up, another hit, and then we've rallied up pretty good. And what I'm getting at is that the shorts, matter of fact, we were short as well in here and a couple other areas, and then went in and cleared that out. And if we get confirmation, not financial advice, but if we get confirmation tomorrow, in other words, we close over, let's say 1950 or so, that would probably be, could ignite, go to run quite a bit higher actually. And also with the shorts involved, because as weak as we've been, that's really the catalyst there. Okay, all the people, institutions, whatever, that have been short, they will have to buy it a little bit higher each time in order to scale out of their positions, which is like putting rocket fuel, under the price of whatever asset it is, gold, silver, what have you.
Let me
Okay?
interrupt you just for a second, Joe.
Sure.
So,
Mhm.
guys, Joe has a course that will teach you how to short, and he shorted. Where was you had three of them up there earlier, and they were
Yeah,
all wins. Every one of them was a hit. I was really impressed by that. So,
right.
if you,
Well, we've been doing this a minute, so we kind of got it figured out. But yeah, this topping tail, as soon as that candle closed, we knew that was a head fake. And I'll tell your viewers, I'll give them a couple of tricks here, and it'll put them ahead. I guarantee you, it'll put them ahead at 80% of the retail, uh, you know, uh, clients out there. This double top, see, it hit a high here. 70% of the time, when you make a new high, near term, it fails. And then when we got this sell-off candle, that was institutions selling off here. We knew it was a done deal. That's when you take your kid's college fund and go short here. Okay, not really, but you know. And then as soon as we popped back up and we couldn't make it up and over the 20, that gave us another signal. And then right here, this little candle here. If you remember, I had another short signal right there. We continue down. And the reason why we go short, yeah, I'll be honest, disclosure, our family holds physical silver. And let me go to silver if it's all right, if you're through.
yeah, go ahead.
Okay, yeah, let me jump over to silver real quick. And there's nothing, I don't know, more discouraging than to buy a physical asset, like silver, whatever, then start seeing the price go to the downside. All right. So what we do, we go short, and by going short on the micro futures, we can control 1,000 ounces of silver for about $2,400. Okay. And I don't want to, get way deep in the woods and have people's eyes glass over, but yeah, we explain all that, and I can, come back later on another video and explain that. But yeah, that's in our course. So imagine if you're in the camp that we think that silver is going to skyrocket at some point. You could do some nice leveraging. Not only do we go short to gain more profit off the market, off the institutions, to go and get more physical, you can also go long, meaning you're looking for more, increase in price to the upside, and play it that way as well. So, yeah, on the click of a mouse, long or short, just like you would Apple. And that's what a lot of people don't know. They can do the micro futures, oil, crypto like Bitcoin, Ethereum, gold, silver, copper, even. Yeah, people don't realize that they can do that, and just off your regular stock exchange. But anyway, here's silver. That's what people are interested in. Uh, Again, today, this is beautiful, so beautiful. This is another one of those short candles that has actually a high probability of rolling to the downside. Okay. However, the caveat, if you don't know to look at the dollar and see it's going lower, then you would probably go short there. And there's probably, I don't know how many contracts are probably short right now, based on that one candle indicator. However, as you can see, silver's getting a little pop. I mean, no, we're not where we want it. I would want it closed over 23.50. $23.50 will get us over that gold line right now. What that does, two things. One, that's going to pop us off on probably an 83 to 87% probability that we'll go to the next level up here, about 24 or 25 or so, this high pivot. But more importantly, it's going to ignite, freak out, okay, lack of any other term, scare the shorts, and they're going to start covering, okay, because this candle did not pan out, okay, to go lower, okay, to get under that 20. So they're going to have to be buying as well. So you're going to have people seeing a nice green candle here. Now, all this is technically right now is hypothetical. Okay. You kind of have to play chess here and be a move or two ahead of the market or anticipate that. Okay. So that's why we're looking at it tonight, even though we still have just shy of 19 hours to go before this candle actually closes. Okay. Now, if we get a big candle like this one here that closes higher, yeah, we're off to the races. But if we get, a stalemate in here, bulls and bears fighting it out, then, that's why we won't, go long until we get that confirmation. That's another little secret, don't do anything until it's confirmed. And let me clean this up and I'll give people, I wanted to mention this. I saw it. Give your viewers another little, 100%. There's not a lot of guarantees in the market or 100%, but this is one of them. When the 20 and the 200 come together, now they're a little far apart. But let's go back here. If you can see that the 20 and the 200 come together, 100% of the time, not 99, but 100% of the time, the 20 will follow price. You just sit on your hands and wait for the market to move. And if it starts moving up, then that means that the 20 is going to move far and away from the 200. And then once price gets far and away from the 200, it always comes back in. Okay. It just, up and down, up and down. But we're getting pretty close here. Something's going to pop pretty quickly. Okay. Even if we sideways consolidate, here across and not really make much traction, at some point, the 20 and the 200 are going to come together. And, at that point, I don't think, silver's going to crash down below that 200 and then the 20, follow it down over an extended period of time like we had here. Okay. So that's, what we're looking for as well. If this doesn't, pan out, there's always another, trick, to use in order to, figure the market out. And then right quick, you see that W over there, that's where we knew to go in long on silver, because there's only really three basic ways that markets reverse. Okay, as you see here, we pretty much had a V-shaped recovery. Let me get that off of there. And then the other way markets recover, which is really the strongest and the easiest one to see, is that you had that W where you make a low, higher low. See over here, made a low and then a higher low, we went up. And then once you start trading up and over the 20, that even, makes it even, the percentage is even higher, even better, that you're going to continue up. And then the last one, I'll just go ahead and put that there for your viewers. But anyway, you come down and then you trade sideways for an extended period of time and get kind of far and away, from that, negative situation, that bad memory, and time heals all, they say. And then you start moving back up. Okay. So, and they'll be able to look at any chart, Apple, gold, silver, Bitcoin, whatever, and they'll see what I'm talking about. And it's just, a matter of learning a few skills, learning, a few tricks, so to speak, that you're not going to hear from Wall Street. They definitely don't want it, you to know that stuff. And then another deal I'll show you. If we start getting over, okay, on any asset, as a rule, mutual funds, hedge funds, institutions, what am I thinking? Then I'll finish up here. I know I'm running over. What else am I thinking of? Retirement, institutions that do retirement funds. Anyway, once an asset starts getting under the 50 simple day moving average, on my chart, it's the green line. They start scaling out. To them, that's bearish, negative, so on and so forth. And then once we get back up and over it, they start piling back in. So that's, something else, for your viewers to keep in mind. So silver starts getting over, let's say that whole round even number of $24, we're going to be over the 50, and they're going to have to start, covering their shorts or doing something to make up for that. Any type of uh, big money, institution, fund, whatever you may want to call it.
Right.
So, but anyway, I could talk about this all night. You know how I am.
Yeah. No, you can. Well, guys, if you're interested in learning how to do this for yourself, just like I am, there'll be a link.
That's what it is. I'm sorry, buddy. I'm passionate about that. What takes 2 or 3 generations, to accumulate, to work hard for, can be lost in one. And that's why I think, everyone needs to not be day traders, heaven forbid, but at least know enough to protect, your family's generational wealth. I mean, we're all responsible for that, and we're all responsible for passing down an inheritance to our children and grandchildren. That's,
That's the
my
thing.
passion.
And you can use this to buy physical.
Oh, exactly.
That's
Yeah. Yeah.
you could make an educated guess on when to buy
Oh, exactly. Oh, yes,
instead
absolutely.
of
Yeah.
just buying when it's time. You can say, "Hey, wait, I might wait till it gets below that 20."
Okay. Yeah. And one more thing. Okay. I'm giving a lot of very, very, and I don't want to sound cocky, but this is very, very valuable information. Whenever you're extended above the 200, this is another trick. And I know guys that make a crazy living just doing this one setup. Okay, when price is extended extremely high above the 200. Now, your viewers can go and check me out, see if I'm a liar or not. Okay, go to any stock, go to your favorite stocks, go to your favorite cryptos or whatever. And I'd say it'd be in the 90% range that this is true. Whenever it's extended and price comes down into it, it will consolidate just like silver did here and bounce. Okay. Now it might not go, back up to the recent high, but you're going to get a nice bounce, a nice percentage, off that bounce. Matter of fact, here's the SPY, the S&P 500, and let's go. I like watching it on the weekly. And as you can see from the all-time high, we came down from an extended. Now you can't look real close. You got to go back. That's the trick. You got to go back. Everything you need to know about a chart and price action is to the left. Okay. Everybody wants to, think about where it's going to the right. It's all about the left. See how far away we were? Even during the COVID slam down. Here's the COVID slam down here. And it didn't only a couple of 3 weeks was it? No, 1, 2, yeah, 3 weeks it was under the 200. Then boom, we had that epic run.
Mm-hmm.
And see right here, it came down, hit that 200 again. But anyway, I got a million tricks I can show people. But anyway, that's what it's all about. This is multi-generational wealth being made over here. And once you get below that blue line, guess what? That's multi-generational wealth being lost.
Evaporated.
And if that's all you, and if this is all you're ahead of 80-90% of people that work for big institutions in the retail market. It's simple as that. So anyway, that's why I call it simplistic charts, Joe. So,
yeah, you break it down really good, man.
Yeah, I appreciate it. But anyway, I don't want to take up your time, but that's what we're looking at.
Well, that's enough for today because we're going to do these every so often. We see something in the charts, we're going to jump on here and kind of show everybody what's going on. That way they can make educated decisions.
Right.
When to buy the precious metals, when to short, when to go long, and I think it's going to be real good. Thanks for coming on, Joe. Everybody.
Absolutely.
Link will be in the description to the course, and hit the like button, subscribe, and ring the bell if you like this kind of content.